The only requirement for this panel was that everyone be over 6 feet tall. That's what I've noticed. Just kidding. We are going to jump in and talk about privacy proactive, actually, privacy and security. So as our space becomes more and more defined, the infrastructure within our space becomes more defined with stables, tokenized securities, real financial institutions on-chain, and as adoption scales, so does the risk, quite frankly. Right. Not just hacks, but also with exposure, surveillance, looking at the space. So today we're going to talk about invisible shields, security, privacy, and how do we make those proactive and not reactive. So I'm really blessed today to be able to moderate this panel with Hypernative and Canton Foundation. We do have Melvis here from Canton Foundation, Executive Director. Thanks for being here. And we have Dan, CTO at Hypernative. So we're just going to kick this off. We've got 20 minutes. I'll jump right into it. So Melvis, you're up first. Yeah. Let's talk about, as Canton positions itself as the only public chain with privacy, why is privacy non-negotiable for institutional use cases like stables and securities?
Thank you very much, Pamela. So just a quick introduction about myself. I'm Executive Director at the Canton Foundation, and for those who don't know, Canton is a public permissionless blockchain that was purposely built to bring institutional finance on-chain at scale. And within this, we are able to bring the solutions through having configurable privacy controls and also enabling the core value of blockchain and crypto, which is interoperability. At Canton, we have built the network that brings institutional capital on chain. And for institutions, one of the core fundamental tenets for everything they do is privacy, in the sense that many institutions are bringing on assets that are being facilitated for trading, investing, and hedging across largest asset managers, institutions, enterprises, and also governments. And so privacy is quite important because these players are heavily regulated. They have internal compliance and also potentially risk management solutions that they need to implement. And lastly, in a world where it's hyper competitive, you don't want everything you do to be publicly transparent, where your competitors or even nefarious actors may take your information and use it for bad activities, right? So privacy is quite instrumental in activities that happen in traditional markets and traditional businesses. But as we talk about blockchains, that's also something that needs to be transformed into the digital blockchain world as well.
So it's not just about what can go wrong when everything's highly transparent, but it's also about losing the competitive edge, the business edge for those institutions, right?
That's right, that's right.
So Dan, from a security lens, does too much transparency actually increase risk?
So I think when you say transparency, there are stacks of transparency.
Yeah, great.
So there is transparency, which I think Melvis was referring to, like who is acting. So I don't know, I don't want everyone to know that I am this and that institution. There is how I'm acting, so I see some address, but I can see everything about that address, like how much funds it have, what does it do, and maybe now I can start devising some, let's call it nefarious strategy to extract funds from them. So that's the second level of transparency. And then there is maybe even the asset itself that I'm trading. Maybe you can see that I'm trading an asset, but you don't know what price it is. So transparency is kind of like a ladder. In traditional blockchain, which is not like what we have, the open one, which is today less institutionalized, I would say, if I take it like the TradFi. So a lot of the transparency is used for exploiting funds, right? So it can be security, but it can also be in crypto. Sometimes security means also financial. So as you said, you have exposure, right? So if I see that someone is exposed to something, maybe I can tweak another place and impact them. So there is an element here. The notion of transparency sometimes says that if everyone sees something, a good actor will show up and say something, and then it will be remedied, right? So that's the good side. But then no one guarantees that that would be the actual outcome. So I guess it's like a two-edged sword.
Yeah.
So there is definitely a contributing negative factor to it, but there's also a contributing positive factor to it. So it's in the middle, I would say.
Absolutely. So from Hypernative's perspective, what does proactive defense look like?
So it's much easier to explain on, okay, so as Hypernative, we've been working for the past, since 2022, right now working with close to 400 customers, spanning all the players in Web3, from like small protocol, large protocols, probably every protocol that you have interacted with, exchanges, asset managers, the big ones, the small ones. So proactive would be that we look at the blockchain all the time, every block that is mined, every transaction that is executed, and we try to foresee whether one of our customers is now in danger. And the way we do that is that we track the actors' activity, the nefarious actors. And we try to say, oh, this guy is doing something bad, and then we're trying to get where are they going. And if we have a good detection, we activate a response which can basically mitigate or remove a position or pause the protocol. And those things, if people are not aware, they're actually happening and saved hundreds and millions of dollars already. Yeah. So it's like an invisible battle that happens on the blockchain.
Wow. So Melvis, after hearing Dan kind of walk us through a little bit of what Hypernative is looking at, can privacy itself act as a form of defense?
Yeah, so at the end of the day, from everything Dan says, definitely that is a component of it, because many nefarious actors are able to, if everything you do is publicly transparent, they can fully track your digital footprint in addition to your social footprint as well, and be able to find vulnerabilities, and then from there look to attack. And so by everything being very, very transparent, that is not the best case. So at the end of the day, being able to have a level of have privacy where you're selectively disclosing what you need to disclose to a need-to-know basis is very key, because at that point, you can have components of your actions that can be transparent. For example, in the traditional markets, on a stock ticker tape, you can see the notional value and the price of what has occurred, but you don't know who is behind it or exactly which side they went, which is basically being able to balance the transparency with some privacy in order to protect the end user, customer, or the counterparties that are involved in the exact transaction that you're thinking about.
So if we get this right, then the security should basically be invisible, and the users and institutions shouldn't really have to think about it.
So that within our network, we mentioned that the form of transparency on Canton is the form of privacy is privacy on a need-to-know basis. So there should be selective disclosures based off of who needs to see what and when and how they will interact with that transaction itself.
Okay. And for you, Dan, what does a system look like that is both private by design and secure by default?
So I think probably, so private by design, I think Canton is a nice version of, I mean, there are probably a lot of implementation that could be done, but there is one that actually took the baton and went forward. So selective privacy, I think, is a very good concept. Obviously, because privacy also, transparency is also powerful, because if I want to interact with someone and I want their trust, so if, for example, I put if they give me a collateral or I give them a collateral, so there is a lot of power in knowing I can see it constantly and not rely on some third party that will tell me, no, it's okay. So it does enable things. But then you don't always, as Melvis said, it does open up new vectors of attack if I know who that party is, because maybe I know of a distress they have in another venue and I can take advantage of it. So I think that's a good thing. I think in terms of the security side, I think as long as you can, and I think that's what Canton inherits from blockchain in kind of just inherits because it's a blockchain system. So they have the decentralized execution, which allows everyone to have the guarantee that what they see in the DAML contracts would actually be executed. So there is no, I mean, it's transparent enough so you can know. And then you allow actors like Hypernative is, for example, an official vendor at Canton. So we can react to things. So we can actually alert if something is would be considered a security issue, whether it's a financial distress or whether it's what a party would consider security, because the line is very vague. So the transparency allows us to act, but then the privacy, or I would say selective privacy, as Melvis referred to it, gives the business way to operate. I don't see banks just like, as Melvis said, like just saying, yeah, I'm Citibank, I'm doing this, I'm doing, it's a bit strange.
And Melvis, is that like the system that you guys are, is that one of the reasons you guys worked with Hypernative?
Yeah, at the end of the day, there are different flavors and types of privacy, and Dan highlighted this in the sense that there's privacy around anonymity, around auditability, operational privacy, compliance as well. So there are different levels of it, and within the network, we're able to allow our participants to, our partners to create their applications or assets with the privacy all the way down to the sub-transaction level so that they can fit whatever regulatory, jurisdictional, or potentially internal controls that they may, internal privacy requirements and controls that they may have to abide by in terms of being able to do their regular workflows on a blockchain.
Yeah. So at Inca, we bring in levels of risk analysis from all different layers within the stack, right? And so looking at it from a security point of view, you know, can you really be like proactive if you're just looking at a single layer? Do you, I mean, how do you really go about kind of building that ethos?
So I think the composable nature of blockchain makes it so that if you're looking at simply like, okay, I have this asset and this is what I'm invested in, you'll say, well, there is not much to see. But then if you're saying, okay, I do see the movements, so what does it mean when suddenly, I'll just give an example, you see someone has moved and that, you don't know who that someone is, but someone has moved a very substantial part of the total supply of the asset, which you can't, that is transparent in many assets. So maybe that causes you to start looking around. Now, if there is any dependency, which is very often the case in blockchains, Canton included, dependency in other assets, then the transparency there could be elevated. Maybe you know of a distress in another asset that serves as a collateral in a venue that you're participating in, and now that's a security issue. So it sounds financial, but what we consider financial in the traditional markets, if, for example, like the 2008 crisis, so you have dependencies that are financial and then one of the dependency goes bankrupt. In blockchain, this is actually translates as security because now there is a venue that accepts a collateral that is basically worthless, and now someone will just withdraw funds. So in traditional markets, we'll say you did a good trade. In blockchain, we would call that an exploit. So I think that kind of gives you a way to think how a security vendor is valuable for blockchain, even if not everything is so transparent, right? So it's basically a financial alerts and monitoring that are giving the security value.
So throughout this conference, there have been a lot of conversations about this kind of balance between privacy and transparency. And so, Melvis, I want to give you an opportunity to address, like, what is a major misconception that you think is out there about privacy infrastructure like Canton that you feel, you know, is still something that you're still kind of battling against, or you want to better explain?
Yeah, with regards to that balance between the two, one thing that our network facilitates and enables is because you're able to build your application down to sub-transaction level to fit whatever use case you may have, you can coordinate building solutions that can be fully transparent should you choose to, because at the end of the day, we are a network of networks, so some applications within Canton, they can have their own Canton that is fully publicly transparent, but then still have the ability to engage with other cantons that have a sovereign subnet that is private. The beauty is that through how the architecture is structured, they're able to communicate and engage in enabling atomic settlements by interacting on the global synchronizer, which is the interoperability layer. And so one key thing is that within Canton, you get to pick and choose that level of transparency or privacy by making the trade-off based off of what your core requirements are.
Yeah, and same question to you. Like, what misconception do you still find that?
Oh, one last thing I wanted to add. One other thing is that within Canton, the level of privacy, which I did mention earlier, is on a need-to-know basis with selective disclosures, where sometimes the misconception is that the privacy on Canton is maybe anonymity. But as I said, there are different levels to it in the sense that it could be privacy around auditability, anonymity, asymmetric privacy, operational privacy, or compliance around compliance as well. So that's one last thing I want to highlight.
So I think people from the more, I would say, consumer and traditional crypto crowd, like they put it on a pedestal to have everything transparent. However, the same people or the same genre of people, and I'm not saying that in a negative way, of course, are also fan of stuff like XMR. And XMR is something which is extremely private, which causes a lot of trouble when you're trying to trace funds due to nefarious activity. So I think that if we are, as an industry, and I'm coming more, I would say, traditionally from that side, from the crypto native side, if we are seeing the value in the extreme privacy that we want to enable the individual from perspective of sovereignty and what crypto actually was born for, then if we are saying, okay, so if the values, the composability and the transparency and the guaranteed execution and the transparent execution are valuable for traditional finance who can now enter the field and get value from it. So they need a different form of privacy. That's selective privacy that Melvis referred to. So I think it's just the Wall Street version of what the consumer native crypto refer to. So when they say, oh, I want this XMR that no one can touch and no one knows and all this. So for a few banks that want to interact, but they want to interact in a way which is guaranteed, they don't need to trust this bank or that bank. Now they have to trust they have someone there that follows everything they do. So they're, okay, let's just put it on a blockchain. We can see everything together. But now if you have 20 of them, they don't want to necessarily know, oh, that's me or that's him. We just know that we are the 20 and that everything is open on the table. We don't know who does what. So there is a value for this, just like there is a value in the extreme value of no one knows anything, right? So it's just a different level of privacy. It's still privacy. So I think that's conflicted sometimes. People don't see that it's actually more towards what crypto is, not what is not. So that's a...
So consensus 2028, right? What will be standard that isn't quite standard yet today?
I think potentially what could be standard is that the fact that today we're still differentiating the types of activities within capital markets on-chain. There's DeFi, there's TradFi, but I think over the coming months, the nature of how the ecosystems are evolving and how real-world asset tokenization is getting a lot of evolution within the different markets that are coming on-chain, we won't be making this differentiation across the two. It will just be all fi in the sense that the blockchain rails will be facilitating the different components of what people are looking to do on-chain, from trading, hedging, to investing, without needing to always think through, oh, I'm doing a DeFi activity or I'm doing a TradFi activity. And we're already seeing that here in the sense that partners like JP Morgan is here and other large institutions are within Consensus, huge prominent booths and discussions and activities as well.
Yeah, I think so. And for Hypernative, what were you guys looking at 2 years down the road? What's the standard?
So I think right now the closest promise that is people are starting to see is everything that surrounds stable coins. But I think once there will be a lot of funds on chain, I think people underestimate the problems of getting it off-chain. And then the whole industry of saying, okay, now I have a treasury, I essentially have a treasury off-chain. All the crypto native companies know that. We're getting paid in crypto. Now we have stables. What do we do with it? And then the bigger companies are like, okay, what do I do with that? And now I need a safe way to earn some yield. Because if it's in a bank account, you'll put it in a deposit in a money market, which is great. But now what do you do on-chain? Because getting it off-chain, it's not that simple. So you'll put it on-chain, you'll just remove it when you need salaries or something which is very specific, and then suddenly all this industry of treasury management and what Canton are building and how do you interact with the more, I would say, traditional, secured things would actually say, oh, this is valuable, I can actually make something out of it.
Awesome.
And one other thing I wanted to highlight is that the scale and growth of everything happening is quite incredible, but we're still at the early phases of everything that could happen within a year and forward, in the sense that the crypto market itself is roughly around $2.5 trillion, but then zooming out, high quality liquid assets are over 300 trillion, and we're just in the initial phases of it.
Just getting that HQLA built in there, absolutely.
And their entities doing quadrillions of settlements per day, right? So
I want to thank Dan and Melvis for being on stage with us today. Guys, if you want to continue the conversation with them, catch them off stage. I'm sure they'd be happy to continue talking with you guys. Thank you.